Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in Dubai, and these are the stories that set your agenda. The global stock rally skids as risk appetite cools ahead of Federal Reserve Chair Jerome Powell's Jackson Hole speech on Friday. We'll get Fed minutes later today. Former US President Barack Obama headlines the second night of the Democratic National Convention as nominee Kamala Harris and her supporters look to recapture the same 2008 electoral magic.
America's ready for a better story. We are ready for a President Kamala Harris.
And Secretary of State Antony Blinken leaves the Middle East without securing a Gaza ceasefire deal, with both Israel and Hamas signalling major obstacles remain. A very good morning. Welcome to Wednesday. And we're kind of at that point in the week where stocks feel like they need something to latch onto. We're waiting for Jerome Powell to speak at Jackson Hole on Friday. We're waiting for signals that cuts are coming in September. But still, that bout of panic selling at the start of the month does seem a long time ago, doesn't it? If it hadn't been for yesterday's drop, the S&P 500 would have hit its longest winning streak in 20 years. So maybe healthy to take a bit of a breather. Doesn't look like it's coming today, though. Futures pointing higher on both sides of the Atlantic. And if we flip the board to the cross-asset picture, you've got the 10-year US Treasury yield steady at 3.8%. We had a fall after Canada's downside surprise on core CPI. But now we look ahead to the Fed minutes for July, as well as potential revisions to the payrolls data for a catalyst today. Euro-dollar at 1.11, a new year-to-date high, propping up G10 FX globally. Gold at a new record there, and Brent still hovering at $77 a barrel as traders assess that stalled equity rally and they mull those concerns about global demand. But let's get to Avril Hong now. She's on standby for us in Singapore with a check on Asia markets. Avril.
Yeah, Lizzie, we're seeing a risk-off day in the Asia-Pacific, as you say, potential downward revisions in payrolls, and then waiting for those Fed minutes. Ahead of all that, the risk is being taken off from the markets as investors pull money out of the markets. And we're seeing actually the Japanese stocks a bit of a reversal from the rebound a day ago. I think the relative strength in the Japanese currency can't be helping. But we also have Chinese equities in focus today as there are outflows. And the Hang Seng Tech, you can see where the drag is really coming from. If you flip the board, I'll show you just what the drivers are, because there is this sense that investors are pulling money increasingly out of the Chinese stock market. Case in point, when you hear from the likes of Walmart and how it is exiting its stake in JD.com, this is a long-standing relationship. It's said to have raised about $3.6 billion from the selling of its stake. It just tells you how the challenging economic backdrop in China is prompting investors to pare down given the diminishing returns for some of these Chinese bets. And that is also something that's playing out among the EV names. And you have the likes of XPeng already in its earnings showing that weak guidance, that disappointment amid the price war. Maybe some bright spots, Geely coming back online after the lunch break. It did show first half profits at a record, and it was a big beat. So maybe that is helping to flip it from the negative sentiment earlier coming into the lunch break. Xiaomi earnings are also due later today. Could see a pickup. And this is a relative new player in the EV space. Flip the board as we talk about the Chinese economy and demand there. Something really interesting that's emerging is how, we've been doubling down on the idea that the Chinese economy is banking on its exports. And today, the PBOC sending a signal via a weaker than expected fix, weaker versus estimates for the first time in about a year. And the signal through that shows us that they might not want too strong a Chinese currency because that would make their exports seem less attractive. All this coming against the backdrop of the weakness in the US dollar. Lizzie.
Avril Hong, thanks for the update from Singapore. Now, bond traders are taking on a record amount of risk as they bet big on a Treasury rally fuelled by rate cuts. We'll get an insight into the Fed's thinking later today, perhaps with the release of the FOMC minutes for July. And Bloomberg's MLive strategist Mark Cranfield will be watching it all. Mark, what are you focused on?
Well, it's not surprising that they have these enormous positions in the bond market, really, when you consider there's so much going on in the Treasury curve. So it's not just that traders expect interest rates to begin soon and probably multiple interest rate cuts from the Fed once they do start going. But you've got all these maneuvers going on. At one stage, we had a very inverted Treasury curve up to 100 basis points, and that timing coincided with a lot of positions being put on between 2 years, 10 years and 5-year parts of the curve. Even now, though it's cooled down a bit, we still have a bit of inversion. We also have this very odd shape where 2 years higher than 5 years than 10 years, and yet 30 years is above all of them. So these strange kinks in the curve mean that more and more traders can come in there and they can play the spreads between one part of the curve and the other without really taking pure directional positions on the market. So that's why you get these inflatedly large positions as people not only expect to see lower interest rates, but they also expect to see big movements within different sectors of the curve. And the Treasury market is so big, it can absorb these huge amounts of swings between traders' positioning. So that's partly what's going on here. And of course, there's room for a lot of volatility if Jerome Powell doesn't satisfy the big expectations that people have. When you look at what's priced in for the next year to 18 months or so, people expect a consistent decline in interest rates. Mr. Powell may try to dial back slightly. He may think that the market has got way ahead of itself. He may want to cool expectations a little, and we could see quite a bit more volatility. So those large positions will probably stay for quite a long time. They may shift around, but they're likely to stay on the high side.
So where does it leave the dollar?
Well, the dollar is probably on a declining path anyway, but that's as much as anything to do with what's happening away from the United States. Of course, it's important, the fact that the US yields are coming down. But if you look at the changes here, and you mentioned it earlier in your briefing there, that the euro is the big number. That's the big currency which is making the difference here. The euro now above 111, and that is the one that is now taking the driving seat in terms of pushing currencies. That's where people are now looking for direction. The euro typically is the second largest currency in most weightings. When people do their baskets of currencies, because it's such an important one, they put that usually number 2 after the US dollar. So that means that when there's traction for euro strength, it has a significant impact because it will pull up most other currencies with it. It will pull up all the Asian currencies, a lot of Latin American and Eastern European currencies as well, not to mention the rest of G10. So they will also be in the slipstream behind the euro. And the numbers are pretty large. We've already seen that people are taking larger and larger option positions on the euro. And in fact, even in the data, the weekly data, there are still some short positions among leverage traders. So they need to squeeze those as well. That's a further impetus for the euro. And on top of that, it looks as though the ECB will not be as dovish as the Fed over the next few months. So when Christine Lagarde speaks in September, she may well say that's the last cut for this year, and that is not what people expect from the Fed, so that again is a boost for the euro. This is the big change that's taking place in the currency market. Watch the euro from here. It's going to be driving the currency world.
Well, 111 is where we trade. Mark Cranfield, our MLive strategist, we thank you as we await potentially Christine Lagarde putting her foot down in Frankfurt in September. But let's get now to the US politics. It's day 2 of the Democratic National Convention in Chicago, and Barack Obama has told his fellow Democrats that the US is ready for Kamala Harris to become the next president. He said the torch had already been passed to Harris, and he took aim at the Republican nominee, Donald Trump.
We do not need 4 more years of bluster and bumbling and chaos. We all know that the sequel is usually worse. America's ready for a better story. We are ready for a President Kamala Harris.
Let's get analysis now with Bloomberg's Vonnie Quinn. Vonnie, I'm feeling the 2008 vibes. Harris is bringing in the veterans from the Obama White House and his campaign. But I wonder how much the electorate's changed in the 16 years since then.
Surely it has changed, Lizzie, but one thing for sure, that Obama coalition that helped elect him the first time round is still there and is still there for the taking. And that's what all of these veterans of the Obama campaign that you say have been brought on to Kamala Harris's campaign, such as David Plouffe, for example, who ran the 2008 campaign, that's what they'll be targeting. The DNC has told us that 20 million people across networks watched the first night of the DNC, which is more than watched the RNC's first night by more than 2 million. So this this is being watched by the American public, and you saw Michelle Obama and then Barack Obama whip up that crowd tonight and really just inject some urgency into this campaign. That coalition that I was talking about, the coalition that elected Obama the first time and the second time in 2008 and 2012, you're talking about, multi-ethnic, multi-generational voters, particularly though black people. We know that black men have been moving away ever so slightly from Democrats to really suggesting that they might actually vote for Donald Trump. 1 in 5 registered black voters in swing states say that now, though that was before Biden pulled off the ticket, so they'll want to get back some of those voters. Also, they'll want more independents and suburban white voters.
Well, speaking of Trump, he's casting himself as a purveyor of common sense. I wonder whether you think that'll be an effective counter when you've got Harris and Tim Walz, her running mate, taunting Trump and his running mate, J.D. Vance, saying that they're, quote, weird.
Exactly. And in fact, the Harris campaign really seems to be leaning into this weird meme, right? They keep just sort of dismissing the opponent as, well, he's the weird one. And it's needling Trump, you can absolutely tell. His advisors have obviously told him to dial back his rhetoric and to talk about himself as being, a sensible human being. We saw this yesterday when he spoke about the Federal Reserve and said, he was just jawboning with the Fed president when he was in office. This time in Michigan on Tuesday, he really did lean in to try to rebrand himself as, somebody who isn't as much interested in forays into culture wars and so on. And he wanted to appear level-headed. He said, I am not a radical at all. I'm just a common sense person that was successful. Now, whether that is believed by his voters or whether they even want to hear that from somebody like Donald Trump is definitely up for question.
All right. One of our reporters summed this election up well, I think. He said it's dominated more by the vibes than the policy. Let's see how that continues over the next few days of the DNC. Vonnie Quinn, we thank you for keeping across it all for us. And let's take a look at some of the other things we've got on the docket today. Before market open, we have the results from Macy's and Target, a bit more of a read on the health of the US consumer. And then at 12 p.m. London time, we're going to get more ECB speak from Governor of the Bank of Italy, Fabio Panetta. That'll feed into the Euro picture, perhaps, that we were discussing with Mark Cranfield. And then finally, at 7 p.m. London time, it is the Fed minutes for July. Do they change the rate cut bets before we hear from Powell on Friday? You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak, and Terminal subscribers can find it by going to DAYB Go. But coming up on the programme, US Secretary of State Antony Blinken leaves the Middle East empty-handed. No ceasefire deal for Gaza yet, and both Israel and Hamas signalling major obstacles remain. We'll get into the detail next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. It's 6:15 a.m. in London, but to the Middle East now, where US Secretary of State Antony Blinken has left without securing a ceasefire deal between Israel and Hamas. After spending Tuesday meeting with Egyptian and Qatari officials, he emphasised the urgency of reaching that agreement.
Our message is simple, it's clear, and it's urgent. We need to get the ceasefire and hostage agreement over the finish line, and we need to do it now. Time is of the essence.
Still, Hamas has pushed back against US claims that it's stalling the talks, saying it's keen to reach an agreement. Let's get more now from Galit Altstein. She's in Tel Aviv for us. Galit, if not Israel, if not Hamas, who or what is standing in the way of a deal at this point?
Yes, so let's start out by saying this morning that the U.S. Secretary of State Antony Blinken has left the Middle East last night without achieving a ceasefire deal between Israel and Hamas. The two sides were supposed to start a new round of negotiations in Cairo this week, but no date has been set for that as of yet. After initial reports did talk about that happening today or by the end of this week at most. On the table now is a bridging agreement, which is an extension of a proposal that was laid out by US President Joe Biden last May. That was already 3 months ago. And according to Secretary Blinken, during his visit to the region, Israel has said yes to that bridging agreement, and now it is Hamas's turn to abide by that. Now, the main sticking points are, once again, Hamas's demand that a ceasefire be permanent, while Israel's Benjamin Netanyahu, the prime minister, insists on preserving Israel's right to resume the fighting after a temporary ceasefire that will last about 6 weeks. And there are also tensions over Israel wanting to keep troops stationed along the Gaza-Egypt border to prevent weapon smuggling. That also includes the very strategic Rafah crossing. Now, Hamas has refused to take part last week in the Doha talks, and now they say that the bridging agreement is far from the Biden outline that was presented in May, and they refuse to abide by what they call new demands that are being put forward by Israel. So the bottom line is that we have no agreements, no date for renewed talks in Cairo, and no knowledge that this time Hamas will participate in talks if they actually resume. And at the same time, efforts are still being made to make these three things happen. These efforts are led by the US and mediators, Qatar and Egypt.
So no agreement, no date. Does that make an Iran strike more likely?
Yeah, so that's a very good question, because on a larger scale, these ceasefire talks that are not picking up at the moment, they do affect not just Gaza, but also other fronts. And that is why it has been repeatedly said that a ceasefire in Gaza could prevent wider regional escalation. On that note, Hamas is thought by some to be stalling because its leader, Yahya Sinwar, wants other fronts to flare up in a way that would potentially devastate Israel, like the ongoing front with Iran-backed Hezbollah along Israel's northern border that's been active since October 7th, and possibly even a direct front with Iran itself. Now, we've been talking for months on the fire exchanges between Israel and Hezbollah, and those are still escalating as we move forward. Just to give a sense, yesterday, 125 missiles and 3 drones were fired at Israel from Lebanon, while the Israeli army attacked Hezbollah targets very deep into Lebanon, as far as 100 kilometers away from its border with Israel. There's also anticipation, as you mentioned, ahead of an expected Iranian retaliation against Israel after a senior Hamas leader was assassinated in Tehran in recent weeks. Israel is being blamed for that, although it has not claimed responsibility for that publicly. So now Iran says that could take a while, and time is on its side. But that, as well as a promised Hezbollah retaliation for a different assassination of one of its military leaders, are still very much on the agenda and expected more if a ceasefire deal in Gaza isn't reached.
Okay, Bloomberg's Galit Alstein, we thank you so much for that update. But it does look like traders are focusing more on the demand story around China and the US than the geopolitical tensions. You're looking at Brent trading weaker, 0.1%, still hovering around $77 a barrel. Now, to trade. The world's biggest shipping centres are getting caught in the crossfire of intensifying geopolitical conflict. And today's Big Take looks at just how the ports have turned to these strategic battlefields as global powers use them to defend their economic interests. Our senior economy and government reporter, James Mager, joins us now from Beijing. James, just talk to me about how the ports are jockeying for influence in these volatile regions.
So a number of, many countries around the world are trying to develop their port infrastructure for a number of reasons. One of them is, as you say, geopolitical influence, geopolitical control. It's also because during the pandemic we saw that there weren't enough ports, and they didn't have enough capacity to deal with the sudden spike in global trade that we saw, especially across the Pacific, but also in other places as well, which is one of the causes of the inflation that has been rampant over the last few years in the US and Europe. And so countries and some companies are trying to develop ports. You're seeing big new ports being opened up in Peru, in South America. There's a big new port being developed in India as well. There are other places around the world where people are trying to both build out their infrastructure so they don't see those kinds of backlogs of hundreds of ships waiting to get into a port to unload their cargo, but also so that they can take more control of the trade that they do from more distant places. I mean, India, for example, doesn't have a big deep water port that's sufficient for the trade that it's doing. So a lot of that trade has to go through other places like Colombo, the port in Sri Lanka, Singapore. So to get more control of their own trade, people are trying to develop the infrastructure. And then also that development then is becoming a point of contention. Specifically, if you see the port in Peru, which is built by a Chinese company, it's being run by a Chinese company. The American government is very unhappy about that because obviously for more than 100 years now, the U.S. government has seen South America as part of sort of an American sphere of influence. But the Peruvian government says that U.S. companies weren't willing to develop that asset for them, and so they had to turn to a Chinese company to build that. So these kinds of necessary infrastructure development are getting caught up in these geopolitical tensions as well.
All right, James Mager, our senior economy and government reporter, we thank you for that preview of the big take. It's well worth a read. It's on your terminal now. Coming up on the programme, as MPOX spreads in Africa, the focus turns to securing enough vaccines on the continent to stop that outbreak. We'll bring you the latest next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. 6:25 a.m. in London, and MPOX vaccines are expected to arrive in Africa by the end of next week as a new strain spreads from the Democratic Republic of Congo. The Director General of Africa's CDC says stopping the continent's outbreak will save lives around the rest of the world. And Bloomberg's Chief Africa correspondent Jennifer Sabasaja joins me now for more. Jen, just give us an update on what more we've learned from the authorities yesterday.
That's right, Lizzie. I mean, you were just pointing to some of the comments that we did get from the Africa CDC on Tuesday. We also did hear from the WHO, which really is trying to dispel any sort of concerns that what we're seeing with MPOX, whether it's a new or an old strain, is going to be anything like what we saw with COVID, and instead trying to stress that we need to avoid the panic and neglect that there was before and instead be proactive. And especially, as you were mentioning there, proactive about vaccine distribution, which we also did hear the Africa CDC director talking about that and how important it is to get Africans vaccinated and then for that to then help the global health emergency. So really health officials spending Tuesday focusing at least on educating the public on that front.
So we don't know which vaccine manufacturers are going to provide those jabs.
It's interesting. We've heard a lot of interest from vaccine manufacturers wanting to be a part of this global fight. When it comes to at least testing capabilities, we heard from Roche saying that they want to update their laboratories to be able to support MPOX testing. But then also we did hear from Emergent. We heard from South Africa's BioVac, and also, of course, Bavarian Nordic, all interested in being a part of this. But it's different being interested versus actually being able to distribute. And what we did learn is that Bavarian Nordic is working with the Africa CDC potentially to get those doses to the African continent. But it is expensive and it is difficult to ensure that everyone is vaccinated. And so we're going to have to pay attention to which of these manufacturers are actually able to do this.
All right, Bloomberg Chief Africa correspondent Jennifer Sabasaja, we thank you for the update. And we're going to go to Ukraine next. The Pentagon sounding the alarm on where the Russia-Ukraine war is headed. Stay with us for that. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in Dubai, and these are the stories that set your agenda. The global stock rally skids as risk appetite cools ahead of Federal Reserve Chair Jerome Powell's Jackson Hole speech on Friday. We'll get Fed minutes later today. Former US President Barack Obama headlines the second night of the Democratic National Convention as nominee Kamala Harris and her supporters look to recapture the magic of 2008.
America's ready for a better story. We are ready for a President Kamala Harris.
And heading towards a stalemate, the latest assessment from the Pentagon suggests Ukraine and Russia both lack the military might to mount major offensives against each other. Well, a very good morning. Welcome to Wednesday. It's just gone 6:30 in London, and you are looking at futures pointing higher on both sides of the Atlantic. We saw a bit of a pause in the stock market rally yesterday. If it hadn't been for that drop, the S&P 500 would have hit its longest winning streak in 20 years. So maybe healthy to take a bit of a breather. But we really are waiting for Powell to speak at Jackson Hole on Friday. In the meantime, we could get a bit of a revision to the payrolls data later. Economists at Goldman Sachs and Wells Fargo looking for that. Goldman says it could be as big as 1 million. Still, if we look over to the cross-asset picture, you've got the Treasury yield on the 10-year steady at 3.8%. We have the Brent price is $77 a barrel as the demand story continues to outweigh the geopolitics. Gold at another record and euro-dollar at 1.11, really setting the tone there for G10 FX. But let's get to the latest in the geopolitics now, to Ukraine. The Pentagon's intelligence agency saying that Kyiv and Russia both lack the military assets to mount major offensives against each other. The latest report suggests the two sides are headed towards more of a stalemate as Ukraine continues its incursion into Russia's Kursk region. We can get analysis now from Tony Halpin. He leads our Russia economy and government coverage. Tony, Kyiv's saying that it's waiting for deliveries from some of its NATO allies. Real disappointment here from President Zelenskiy. I wonder if these delays continue into the winter, where that's going to leave the conflict.
Yes, I mean, Ukrainian officials are very concerned that they need to improve defences of their infrastructure, particularly their energy infrastructure, when winter comes, because it's clear from the last 2 winters that Russia has made a campaign of targeting energy installations in Ukraine to try and grind down the Ukrainian population, break morale, and they expect something similar this time, and so they want to be better prepared for it. They say that their allies, in fact, did provide offers of more air defence systems at last month's NATO summit, and they're really looking for the allies to deliver. Zelensky particularly said he addressed the US, Britain and France, but other countries have also promised air defence systems.
And do you foresee Ukrainian support for military action against Russian forces in Africa increasing?
This is a strange story, actually. Mali accused Ukraine of involvement in an attack by rebels that killed government soldiers and Russian Wagner mercenaries last month. Ukraine denied that, but there's a clear competition going on between Ukraine and Russia for influence in Africa because of the importance that Africa has in the global south. And while this particular incident is clouded in mystery and Mali didn't really provide any evidence, there is evidence that Ukraine is trying to counter Russian influence in Africa, which has been growing over recent months and years.
OK, Tony Halpin, we thank you for that update. Bloomberg's Russia economy and government coverage team leader. And we can get more analysis now from Maria Avdeeva, an expert in security who's been with the Ukrainian military in Sumy on the border with Russia's Kursk region, where this incursion has happened. Really good to have you with me, Maria. I wonder, when you were there, what morale felt like on the ground on both sides among the troops.
Very good morning to you, Lizzie. The morale is on the boost, and when we were with the Ukrainian military in very close to the Ukrainian-Russia border, you can feel how energetic and passionate they are about this Kursk operation. The weapons are heading into the Kursk Oblast of Russia from Ukraine, and they say that even troops that are not specifically involved into the operation, they also, the soldiers who are fighting in the Donetsk region and other regions, they also, their morale boost is also very high because they think that luckily now finally Ukraine is progressing, Ukraine is moving forward, and this advance was happening when there was a successful operation in Kharkiv region. So this is very important for Ukrainian soldiers, but also for the population in Ukraine, for civilians who see it as a very successful progress from the Ukrainian side, and everyone says that now Ukrainian partners have also a chance to see how strong Ukraine still is and that Ukraine is still capable of winning in this war.
Well, to what extent is Ukraine's advance into Russia hindering Russia's advance into Ukraine?
Well, this operation came as a surprise, if you wish, as an asymmetrical move, because currently Russia is progressing in Pokrovsk direction, not dramatically, but gradually, slowly, trying to cut the most important logistical route between Pokrovsk and Konstantinivka in Donetsk region. So if Ukraine will just put these troops over there, then Russia will bombard them with the KAP. These are gliding bombs and other types of artillery, which Ukraine is still not having enough. Otherwise, Ukraine decided to move into Kursk and create what is President Zelenskiy calls the exchange fund for territories, exchange fund for prisoners of war. So Russia basically has now to decide whether they move, relocate troops from other direction to liberate or to defend their territory in Kursk region, or they progress there, but then Ukraine also has more chances to move forward deeper into Russian territory.
It's interesting that you say the morale among the troops is more focused on the deliveries that are arriving. I wonder how much more effective this buffer zone, as Zelensky puts it, would be if his allies lifted restrictions on the use of their weapons in the Kursk region.
Well, Ukraine can use Western supplying weapons in Kursk, and Ukraine does it. But we are talking about the smaller and medium-range artillery and HIMARSes, for example. Ukraine is constantly asking to leave this ban to use weapons to hit deep inside Russia, where Russia is having their military fighter jets and military facilities, because this is from where they lift up fighter jets that later bombard Ukrainian territory. And this ban does not allow Ukraine to put down these fighter jets before they launch these deadly missiles that hit civilian objects inside Ukraine. They hit critical infrastructure and energy facilities in Ukraine. So would Ukraine be able to do this? This will completely undermine Russian military and war effort, and the Russian war machine will start struggling to bring more resources to their war in Ukraine.
And we know that the Indian Prime Minister Narendra Modi is headed to Kyiv on Friday. He's ruled out a role as a mediator in the conflict. So I wonder what role you do see India and China playing in this conflict.
Ukraine is constantly pushing for more countries, including India and China, to take part in the Ukrainian peace formula. As you know, there was already a summit in June, and Ukraine is preparing to have one more summit later in the autumn. And Ukraine asks all partners and all other countries to participate. And the aim of this peace summit is to push Russia for peace, because this is what Ukraine wants. Ukraine says we want peace, but we do not want peace on the conditions of Russia. We want peace that guarantees the territorial integrity and sovereignty of Ukraine. And there is possibility and the struggle that such countries as India and China will be on Ukrainian side here and will push Russia to stop the war and start talking, because this will allow to save Ukrainian lives and to save also Russians, because I've also been able to talk to some Russian POWs here in Ukraine. Ukraine takes them massively, and they also say that they don't want this war. They are conscripts. Many of them are as young as 18 and 19, and they have been brought into this war by Putin and his military elite, and they say we don't want this. People in Russia also don't want this war.
Okay, Maria Avdeeva, really good to have you on the programme. Thank you so much for your time this morning. Security expert at the Foreign Policy Research Institute. Thank you so much. Now, let's look at some of the other items we have on the docket today. We have US retail earnings coming from Macy's, TJX and Target. A bit more of a read onto the health of the US consumer. We'll get more ECB speak from Bank of Italy Governor Fabio Panetta. See how that plays into the euro-dollar story. And then we're going to get German 10-year and US 20-year auctions. And at 7 p.m. London time, those Fed minutes. Perhaps a bit more of an idea of where the rate path is heading before finally on this day 3 of the DNC we get Tim Walz's acceptance speech as Kamala Harris's running mate. But coming up right here on Daybreak Europe, the EU's plan to introduce an extra 9% tariff on Teslas from China. Oliver Crook will bring us the latest next. This is Bloomberg.
In Chicago for the Democratic National Convention.
So we've got a race here, and the sprint begins.
We'll bring you breaking developments.
Vice President Kamala Harris closing the gap with Donald Trump.
And informative analysis, all leading up to special coverage Thursday evening, including Vice President Harris's acceptance speech as the Democratic nominee for president.
As president, I will show Donald Trump what real leadership looks like.
Tune in all week on Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe. Now, the European Union is planning to introduce an extra 9% tariff on Tesla's imports from China. It's the bloc's latest move aimed at countering subsidies from Beijing. And we can get more now from Bloomberg's Oliver Crook. He joins us from Berlin. Ollie, just talk us through the latest twist in this road for EU tariffs.
Yeah, Lizzie. So this is basically the latest revision that the EU has put forward in terms of the numbers, the percentage point tariffs on each of the automakers from their production in China and the trade barriers and the tariffs that they're going to face bringing those cars into Europe. So they've actually brought them down across the board for many of these car makers. So many of the Chinese ones like SAIC, they will have at the very upper end of the range a 36% tariff. Geely, which owns Volvo, will have a 19%. BYD, which is obviously kind of the main player in China, a 17% tariff. But it's interesting because Tesla, when you compare it to all the rest coming in at 9%, that is much lower than it had been previously and much more than anybody else. Previously, Tesla was closer to 21%, which is about the sort of average across the board. And the EU says that because of their investigation, what they have found is that many of these foreign car makers actually get much less in terms of subsidies from the Chinese states. However, Tesla still did benefit from land use rights, income tax reductions, a bunch of different grants, including one that is a national subsidy for all sort of producers that export out, which, as you can imagine, the EU is not too pleased about, but also catches some of the other non-European, other European automakers. BMW, for example, had their tariff reduced. They make the electric Mini over in China. So these conversations are going to continue for a while now between the automakers and the EU until the end of October when we get the final tariffs in place. And those tariffs, Lizzie, will last for 5 years. So really important for everybody to get this right.
But Ollie, why do tariffs need to be a discussion for Tesla when they've already got a factory in Germany?
That's right. They have a factory not too far from here, just in Brandenburg, that they opened up a couple of years ago, and they're sort of building up more and more production. The reason is they built only Model Ys there, and Model Ys are Tesla's most important product here in Europe. It is the most popular EV that is sold in Europe, but all of the Tesla Model 3s, for example, those are built over in the Shanghai facility, which is an absolutely mammoth one. If you look at their global footprint in terms of production, they made 1.8 million cars last year. They made about 800,000 of those in China, just under 700,000 of those over in the US. In Europe, they're only making about 350,000. So that really shows to you how much bigger it is. It does put a little bit of pressure, though, potentially for Tesla, which is well positioned to sort of begin production further here in Brandenburg, though they have had issues in terms of labor relations. We know that Tesla and Elon Musk are not really a fan of unions. Germany is a big fan of unions, but also environmental concerns about expanding that factory, though they did get the approval to do it. Though they were not able to expand the factory, Lizzie, Elon Musk did open a nightclub in the basement of the Brandenburg Gigafactory, and we note with interest that he opened the so-called hamster rave cave after he had been reportedly rejected from Berghain, one of the most sort of prestigious clubs here in Berlin. So I guess maybe, hell hath no fury like a billionaire scorned here, with sort of saying, if I'm going to get rejected, I'll just open my own club at my factory.
I don't even dare ask Ollie whether you've been to Musk's club. I'm going to ask you instead how China's responding to all of this.
It's for Tesla employees only, so I need to get a badge to get in.
All right, Bloomberg's Oliver Crook, we thank you. Waiting for his badge from Elon Musk. Now, to the latest earnings out of the US. Do not bet against the US consumer. That was the conclusion many drew from last week's US retail sales data. As earnings season continues, we're getting a clearer picture on the health of the American shopper, and we can bring in Bloomberg's Dasha Afanasieva for more. Dasha, just take us through Lowe's results yesterday.
Morning. So Lowe's yesterday downgraded its outlook for the year again, both in terms of sales and operating margin. It now expects a bigger contraction than it did before. And this is because people aren't doing DIY at the moment. They're not buying these big ticket items. And that's a trend that started back in November for them. And the biggest driver of that trend is that people aren't moving house. They're not buying new houses. The company said that turnover of housing is the lowest it's been since the 90s. And that's not expected to get any better until there's a cut in interest rates.
And we get Target, Macy's and TJX COS today. What are you looking out for? What should traders brace for?
So I think that obviously the key thing is the strength of the US consumer. I think the other factor is if you accept that it's very difficult to grow the top line, what is it that companies are doing to grow profitability? Because that is the only way that you're going to, in the end, grow your earnings per share. So are they doing cost cutting? Walmart last week talked about using AI to cut costs in marketing. Are they finding other ways to be more agile and respond to the consumer? The other thing that we found from this results season is that companies like Walmart that position themselves, possibly TJ Maxx, position themselves as really, really good value and are seen as a deal, particularly the Sam's Club line of Walmart, which is a membership program. Are they a good deal for the consumer? Is that how they market themselves? Because those products do better because the consumer is more discerning. They either don't have enough money to spend on things and they're just cutting back. Or as Lowe's rival Home Depot spoke about, they're deferring their big spends and they're waiting until products are better value.
OK, so kind of another economic barometer to feed into that Fed story. Bloomberg's Dasha Afanasieva, we thank you for the preview. Now to some of the stories making news this morning. Shares in JD.com have slumped after Bloomberg revealed that its biggest shareholder, Walmart, is selling its stake. The US retailer is said to be offering some 144 million shares for as much as $25 to $85 each. That would raise more than $3.7 billion and end an 8-year partnership between the two companies. And elsewhere, the Italian Coast Guard says it's unlikely to find any more survivors from the sinking of a luxury yacht off Sicily. It means the British tech tycoon Mike Lynch, Morgan Stanley International Chairman Jonathan Bloomer, and 4 others are presumed dead. The yacht was hit by a violent storm early Monday, with Lynch, his family and associates on board celebrating his acquittal in a long-running fraud case. And Geely has posted a record first-half profit thanks to surging exports and demand for electric cars. Net income rose more than 6-fold in the 6 months ending June the 30th compared to a year ago. The strong performance saw Geely raise its 2024 sales target to 2 million vehicles from 1.9 million vehicles. Coming up on the programme, we've got plenty more for you, so do stay with us. This is Bloomberg.
Everyone is looking for a way to get into the bond market and frustrated beyond belief because they never got to buy at yields of 5 to 6%. And once rates start coming down and money market fund returns start to drift lower, that money will come in.
JP Morgan Asset Management's Bob Michael speaking to Bloomberg there. And as you can hear, traders ready for the rate cuts. We're waiting for Jerome Powell's speech at Jackson Hole on Friday, the highlight of the week. But before I go, I just want to leave you with this couple of charts to set you up for the potential market movers today. First off, we could see chunky revisions to the payrolls data. You've got economists at Goldman and Wells Fargo saying that the preliminary revisions could show the payrolls growth in the year through March was at least 600,000 weaker than currently estimated. And Goldman says it could be as big as 1 million. So a change to the chart there. But if we flip the board, we're also waiting for the July Fed minutes today. Will they give us more clues as to the rate path ahead while we wait for Powell on Friday? Currently, as you can see on the screen right now, 4 rate cuts are priced before the end of the year. That compares to 2 since June 30th. Do we see a shift in this chart before the week is out? All eyes, of course, on Wyoming, but plenty to watch out for today. That does it for Daybreak Europe. I've been Lizzie Burden in Dubai. Kriti Gupta and Guy Johnson are up next with the opening trade. You're looking at futures as we head towards the cash open, pointing higher. The Euro Stoxx 50 higher 0.1%. Nasdaq futures also higher 0.1%, and S&P E-minis up by the same amount. It looks like that pause in the stock market rally yesterday will be over today. Could we see an even more of a boost on the S&P 500? Waiting for a boost to the sentiment as we look to the 10-year US Treasury yield, currently steady at 3.8%. Brent trading at $77 a barrel, weaker at 0.1%. These demand concerns continuing to outweigh the geopolitical risks, and traders really mulling that equity rally that has stalled for now. If it hadn't been for the drop yesterday, you would have seen the S&P 500 hitting its longest winning streak in 20 years. So will it be enough of a breather? Will we get back to the action today? You've got euro dollar currently trading at 1.11, weaker at 0.1%, setting the tone for the rest of the G10 currencies. We will keep an eye on the dollar as we have those FOMC minutes and potentially that revision to the payrolls data. But we'll stay across all of it. Guy and Kriti coming up next to look forward to it all for you. The opening trade up next. This is Bloomberg.